Hi, everyone. Welcome to the MIU today. I've got Amir I here. My name is Ray Cruz. We're with MCF Mortgage. And today's episode of the MIU, our Mortgage Intelligently University, we're going to be talking about a credit gap or a gap of credit. So what does that exactly mean? So during our process of underwriting a loan, and from the time that the loan credit is pulled until closing, we actually monitor credit. So, and prior to closing, we do what's called a credit gap pull. So Amir today is going to talk about that, and he's also going to tell us the importance of it and some of the pitfalls with it. So Amir, take it away.
Absolutely. Hey, thanks, Ray. Guys, yeah, as Ray said, we do what's called a gap credit check, okay? We do two things as lenders. When you guys apply for a loan, obviously we're looking at your credit. Once you actually get into contract, we start what's called undisclosed debt monitoring. We want to make sure that we are monitoring your debt, that nothing new comes on to your liabilities, so that you actually stay within the lending guidelines. So that's called undisclosed debt monitoring. So
really quick, Amir, can I just jump in really quick? So when Amir refers to we is not just MCF Mortgage. We is every lender in the country that's giving mortgages. So
Absolutely.
Any bank, lender, mortgage company, everyone has to do it. So
Absolutely.
sorry, Amir,
yeah.
go ahead.
So by we, I mean lenders, guys. Thanks for pointing that out, Ray. The lending community monitors your credit. We want to make sure that when we're extending a loan to you, you're not going out and taking additional debt on, and that you're still going to have the ability to repay this loan under the current liabilities that you have. Now, right before closing, we also go one step further. We do the gap credit check. Okay, guys. The gap credit check just goes out into the credit arena, into the credit world, and views your credit and takes a snapshot and compares it to when you initially came into the process with your lender. During this snapshot will show if you've opened any new credit, if you've increased your lines of credit, you've spent more in your lines of credit, or like, for example, you've missed a mortgage payment that might make you not eligible for a refinance or for a purchase. So it's very important that during this process, the minute you get into an application, guys, and to the time that you actually get into contract or your refinance, if you're doing a refinance is over, you are very protective of your credit. And what do I mean by that? I want to work with the families and the borrowers that actually call me before they make the smallest decisions, because the ones that ignore that phone call, usually the end result has a lot of heart pain associated with it. Let me give you an example of how this all comes into play. So a borrower that has worked with us multiple times, she is a frequent client of ours. She's a real estate investor. And she knows the business, but sometimes too much knowledge is not good, because you forget the basics, right? So she was in contract to buy a house, investment property, where everything is going smoothly. Prior to closing, we do the gap credit check. Guess what? She went and got a line of credit on another property that she had that was never disclosed to us. And now she has $200,000 line of credit that's all been used, right? You could imagine what the monthly payment on $200,000 does to her debt to income ratio. Her debt to income ratio went from, I want to say, somewhere in the 40s to the 60s. Ineligible for this transaction now, right? So we had to save this, and we did save it, but it was a costly save. We had to structure it into one of our portfolio products, has expenses, has a higher rate. She had to pay extension fees to, get an extension, because it's a whole new loan. It's a whole new process, guys. So this could have all been avoided. When speaking with her, I said, why did you need this money? She was renovating a house. Could that renovation have waited? Yes, it could have waited. It could have waited 2, 3, 4 weeks after we closed the current transaction. So it's really important, guys, do not open new debt. Follow your loan officer's advice. If you're thinking about opening new debt or just inquiring about new debt, you guys, even the most minute things result in credit pools. For example, when you're shopping online and they say, hey, we're going to give you a 10% discount if you use our credit card, it's a credit pool. And we're going to require documentation to it from it in regards to it. I'm sorry. So mind the gap, as they say in London. In London, they say mind the gap, meaning, hey, don't step on the platform of the metro and be careful you don't fall down. Mind the gap when it comes to lending, guys. You have to monitor your credit. Don't open a new credit. If you are going to open it, consult with your loan officers, see if that new credit line will make you ineligible for your loan. Don't run up your credit cards, because those in turn will get reported to us as your lender when we're monitoring you during this stage, and it could lower your credit score depending on how long your transaction takes. Right now, guys, we have people that come in, they get approved on, let's say, on month number 1, and they've put 6 offers in, and we're on month number 7, and they still don't have a house because it's so competitive. We have to keep repooling credit every 90 days or so. When that happens and you're running credit cards up, your score gets lower and lower and lower. So the gap credit check is real. It could stop you from buying a house. It could stop you from closing. And just be honest and upfront with your loan officer. You'll most likely get a solution that meets what you're looking to do. So that's the gap credit check.
Yeah, thanks for sharing that, Amir. So true what Amir just said. It can prevent you from closing, and it can definitely prevent you from closing on time. I can share a quick story. Just a couple months ago, had a client who ended up having to spend an extra $7,500 to extend. That's the daily rate they had to pay on their contract, per the contract, because the closing had to be extended. Because a few days before their settlement, they actually went to Target and went and purchased a bunch of home furnishings, actually, for the property that they were purchasing from Target. The cashier asked them a simple question: do you want to, open up a credit card to save 10%? Exactly what you mentioned earlier, Amir. 10%, right? So maybe may have saved like $30, $40, maybe, right? So they did. So what happened? That we got triggered on that, right? Now and they actually did open up credit, okay? Right. So not only did they have a credit inquiry, right, just a couple of days prior to closing, but they actually got new credit prior to closing, and it was like $400, right? So now, what do we need as the lender, or any lender, right? They need the documentation showing the balance. They need the terms of that credit, new credit from Target. Well, guess what? How long does it take Target to set up that account? When will that paperwork from Target be ready, showing the terms of that transaction, right? It took almost 2 weeks. Took almost 2 weeks to get that paper. So without that information, we don't know what the new payment is going to be, right? On that debt that they just took on. But it was a family, husband and wife, but it was the wife in this particular case who was at Target, and she saved, $40, right? On a $400 debt, but it ended up costing them $7,500, right? So it's not worth it, right? Not worth it. And there was nothing that, the sellers did wrong. There was nothing that we did wrong as a lender, nothing that the realtors did wrong, right? It was just a matter of they went shopping, opened up new credit, and, we didn't even find out about it. They didn't pick up the phone and call me. So there was no communication. And during the process, we send out so many emails. We have so many conversations about don't open up new credit. Don't let your credit get pulled. Don't make any large transfers, right? There's just a list of items that we are constantly hammering home to clients during the process. She wasn't reading her emails, and for that matter, neither was the husband, right? And they weren't, listening to me when I was telling them, don't do X, Y, and Z, right? Because obviously they still did it. They were in the moment. They thought, hey, I'm saving $40. It's a discount, no big deal. So just, not present and not understanding the real effect of something like that, right? So this is a real story that happened about 2 months ago with one of my clients. And unfortunately, again, it cost them $7,500 to save $40.
Well,
So
I think,
an expensive lesson.
yeah, I think you're using a good example. Didn't you have someone that bought a Mercedes the day of closing? I think we all had one of those.
Right prior to closing, as a Christmas gift.
Right.
As a Christmas gift, yeah. So they went in, yeah, that's a different story, but yes. So, unfortunately this happened. So they went to a car dealership. We got the notification of the credit inquiry, right?
Right.
So we got document, I make the phone call, asked, hey, what's this credit inquiry for? Oh, I bought a Mercedes for Christmas. I bought myself a Christmas gift. Right. Okay, great. Did you pay cash for it?
Right.
I was hoping they said yes, they paid cash for it, right? But of course they didn't. They ended up actually, financing the entire thing. So luckily the debt to income ratio was low enough, already to begin with. But once again, we had to wait, right? We had to wait to get all the paperwork in, get at the terms, and get their credit report updated. It just, in neither one of these two transactions, luckily, it didn't kill the transaction, right? Because both borrowers' debt to income ratios sort of low to begin with. However, they were both delayed because of this, right? So, and even in delaying the transaction, there are costs associated with delaying that transaction that the buyers have to pay.
Yeah, if you're in a sales transaction, you may have extension fees. You may have rate lock issues where your rate expires, refinances, your rates expire. So just, something very minute, something very small, a lack of following instructions can cost you thousands upon thousands of dollars. And Ray says that we're professionals in this business. I believe we've been in this business, long enough to know where the pitfalls are, and we do everything we can to inform our clients. They get videos, they get emails, but you can only lead a horse to water, but you can make the horse drink the water, right? And I'm using that analogy is that when you're in this process, guys, every piece of email, every piece of, anything you get from your communication, you guys need to read it, you need to digest it, and it's not there just to be sent. It's there to be read. It's there to be taken
for your own protection.
Absolutely. You got to follow it so that you don't find yourself in a scenario where something so trivial can cost you thousands in the long run. So that's the gap credit, guys. That's the undisclosed debt monitoring that every lender it activates when you're in process. So be mindful of the gap and don't spend money until it's all done. Right.
Wait for your closing date before you go furnish the purchase, furniture for the property, right?
Don't furnish it till it's done, right?
Or buy a new car.
Or buying Mercedes.
Any car. It doesn't even matter what it is.
Exactly.
All right, guys. Take care. Till that next episode.
Take care.